Hi everyone, good morning and welcome to 3 Charts in 1 with me, Richard Perry, market analyst for Infonox on Friday the 5th of August, non-farm payrolls Friday. Bit of a consolidation, but I have got 3 charts that are showing some interesting signs. I've got the Aussie dollar, I've got the oil price, which also is breaking down a little bit, and I've got the S&P 500 futures just consolidating under resistance. But straight into it with this Aussie dollar. Now, what we have had, just generally speaking, is this break of the downtrend, which is a strong move, a positive move, which starts to suggest that the long-term situation is not as negative as it once was. However, what we have also seen is this recovery trend, which I could draw in there, is just been broken now, hasn't it? It's just started to fall over and maybe even sort of turn into a more of a consolidation play. And the thing I'm sort of looking at here is this recovery here that we saw back in May into June. Now, this recovery essentially is the same sort of situation that we saw here. We've got this break of a downtrend, and then the recovery just starts to stall and then fall over again. Is this the same thing happening again? We've got the break of the downtrend and it's starting to stall again. So that is the question. Is the Australian dollar starting to stall, or is it just a sort of a pause within the recovery? My take on it, I think, bearing in mind the moving averages are flattening off and the momentum is starting to sort of hold up above 50. I think I'm okay with this at the moment. I think it's a consolidation. The worry I do have is that last time was that when the RSI failed around that 60 point was here again. So we need to see this market holding up above the supports at 68.80, 68.70. That is the key area. Supporting at 68.70 needs to hold. And then it needs to break out above 70.50 to really continue. So at the moment, we're sort of consolidating in a range, and they are the two key levels I am looking out for now. Moving on to the oil price, a big breakdown, actually. That oil price breakdown, 4 strong negative candles in a row. I'll go back, and it is now breaking down to levels seen not since the 25th of February. On a closing basis, this breakdown is really key. And look at the momentum indicator, the RSI, it's consistently under 50. It is back towards that level at which we saw the recovery back in early July, late June, early July. So this is an important moment. Does it now start to tick higher again? We've got to move higher today. Ultimately, I still think this could be a little trading range, really. I mean, it has broken down the big medium term range, but ultimately it does look like it's still in a near term trading range, and ticking higher today, we might see another near term recovery. It's not necessarily the most bearish move we've got, although obviously closing down below $100 is a key move. It doesn't look as though it's going to continue at the moment, but we'll see what the bull move does now. Does it start to fail and fall over around this sort of 101 area, 102 area, 103? If it does start to fall over there and move back towards the 100 area, then you can start to see the prospect of maybe 95, 96 again. So it'll be interesting to see how the market reacts to this bull move. It is unwinding a little bit. You can see that on the daily RSI back from that sort of low 30s area. You've got the 4-hour RSI, which is unwinding from below 30 as well. So we might see a little near-term rebound, and then you might start to see the sell-off once more. So the resistance comes in around that 101.60 to 102 area, 102.50. So we might see a little near-term rebound. Now, the S&P futures, interesting, strong uptrend, really is positive. You've got the bullish golden cross as well on the 21 and 55-day moving averages. We've got the strong momentum on the RSI up towards the 70 area, high 60s. That suggests really strong positive momentum, but it is hitting this resistance. And this resistance that comes in really does need to be broken. 4,200 needs to be broken to the upside to continue the move. I'll put it one more level out. This is the first really important resistance. This is the first key lower high of the sell-off. If that gets broken, then that turns into a sustainable, potential sustainable recovery in terms of trend analysis and Dow theory. But it needs to be broken, 4,200. It is progressing well. You've got the uptrend and you've got the support that comes in at around 4,080. And you can see that here, that support at 4,080 is positive and strong. But anything, I think, back towards sort of below 4,000s is okay still. I think you definitely don't want to see it below 3,920, but at the moment this is just consolidating. Buying into weakness I think is still a viable strategy in this recovery. You could, as I said, see a near-term move back, but that breaks this mini uptrend recovery, but still I think it's in a recovery phase at the moment, but that 4,200 level of resistance needs to be broken. So I wish you good luck in your trading today. Thank you very much, everyone, and I'll speak to you next week. Thank you.